Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. Really pleased to have who is most certainly our most favorite guest on this show, Michael Oliver, olivermsa.com. Folks, if you haven't signed up for his letter, I think you're going to want to do that if you haven't. And especially now because especially now, I'm not sure because everybody knows we're in a bull market in silver and gold. But Michael's been so helpful to me over the years in keeping me from running away from gold when I would otherwise have gotten discouraged. So he's been very, very helpful, not only in gold and silver, but in other markets as well. So he is our most favorite guest, I must say now. We're running maybe a fairly close second with Kirsten Brewer and other people related to hydrograph clean power because that thing is doing extremely well. But nobody better to talk about gold and silver than Michael Oliver. So, Michael, thank you so much for joining me again.
Good to be back, Jay.
You know, in your last weekend, your 360 report, you said, let me just read a quote. This has to do with gold. While many analysts, traders, and investors are now suddenly impressed by gold and silver, they also continue to think in norms about such trends. Overdone, needs a correction, they say. When do I take a profit? Could be topping. The doubting chorus continues to wail. So, Michael, what are they getting wrong? What are they? You're not at all thinking about exiting the precious metals. If anything, I think you think now is the cream on the top, perhaps.
Yeah, I think that we're headed to a new price reality. And I know a lot of people think we're expecting in the next handful of months, let's say well into next quarter, first quarter of next year, that we're going to get an explosion in the metals that will drop jaws in terms of not just gold going up. For instance, gold, it had two bull markets the last 50 years. They were both eightfold moves, bear low to bull high, different span of years, but still eightfold move. If we have an eightfold move, we go to $8,000 gold. Why? Because the bear low was 1,050 in 2015. Okay.
Right.
Forget that. That's a norm. Okay. Silver's the one we're watching the most because silver will move with gold. It always does. But to a lesser extent over time, it's underperforming gold. There are times when it outperforms, times when it underperforms. Right now, it's dirt cheap relative to gold. And I think it's going to go ballistic in the next 6 months. And there's certain reasons for that. You can look at a price chart of gold and silver, and they're going up. Okay, well, it's a bull trend. No, that's no revelation, right? Okay, anybody can note that. It's the spread relationship between silver and gold that looks like it's ready to trigger an upwave. And the last time it did this, last two times, was in the final 6 months of the 79 to 80 explosion, where silver went from the teens to $50 in 6 months. And in late 2010 to the April 2011 high in silver, where silver doubled in 6 months. This time we expect even more, but it's going to be compressed in a very short time span. Silver, by all kinds of metrics, is vastly underpriced. We know markets make errors, and I think silver has made a huge error. It's still in a 50-year range, only just now moving out of it. That's not true with almost any commodity. Not where they were in 1980 or even 2011. So I think silver is going to catch up and it's going to shock people. So people's notions of norms could be sacked.
Yeah. Well,
so suddenly,
if I'm understanding what you're saying, to you, just looking at past bull markets in gold, we could be looking at $8,000, but that's the norm. And what you're seeing something potentially much bigger than that.
Well,
is that right?
I think this move is going to be different. And one, we're going to seek a new reality price level. In other words, silver, for example, has had a reality for 50 years between basically, $50 highs. Those are extreme. Let's call it 40 to 30 highs, and lows generally 20 or less. But it's been stuck in this sideways range for 5 decades. Okay. That's not a reality. Look at a money supply. Okay. Gold at that time has gone up in massive wave layers.
Right.
Eightfold pullback, new reality. Another eightfold move, pullback, new reality. Even the ranges that occurred after those peaks, when you pull back, were staircasing higher over the past 50 years, dramatically. Silver hasn't. I think it's going to catch up, and there's technical reasons for that. Uh, and I think there's fundamentals at work here too. And I don't want to get too much into that, but we have a debt crisis now like we've never had. It's not a mortgage crisis with mom and pop jeopardy of their home, like in 2007 to 9. This
Mhm.
is a government debt crisis.
Mhm.
And there's no easy way out of it. And like Jamie Dimon says, this game playing every decade or so, trying to solve it with this little patch up or that little, it never works.
Mhm.
Ultimately, you face a crisis type situation. And I think could very well be approaching that. So watch the T-bonds. Right now, they're trying to rally. This is their third rally effort in T-bonds over the last 3 years since they collapsed in 2020 to 2022.
Mhm.
If this rally doesn't take hold, particularly if the rally doesn't take hold, if the stock market starts to sag as well and bonds don't go up, then that shows how anemic that bond market is, how
Mhm.
high the yields are, and how low the price. It can't get off the floor,
Mhm.
which says it's sick. Because
Mhm.
frankly, when you look at the price chart of T-bonds, and this is a major issue because it's bigger than the stock market,
Oh yeah.
it collapsed. Okay, we call that collapse in 2020. And then since late 22 and 2023, you could draw a line sideways. Multiple efforts to base and come out of the base, they
Mhm.
all fail. Why can't it come out of its base?
Mhm.
Why? Because maybe the fundamentals are so bad, it
Mhm.
can't do what most markets might be able to do.
Mhm.
And if this current rally rolls over much in T-bonds, right now they're 118 plus, you get back under 116, put your helmet on.
Yeah.
You may have a T-bond situation that you weren't expecting. That will panic the stock market.
It will also panic the Fed, I would guess, and start
Yeah,
to print.
absolutely.
I
More
mean,
so.
it's just,
Yeah.
don't you think that the gold and silver markets are snuffing that out? They're sniffing that out right now,
Yeah.
aren't they,
Well,
Michael?
what does gold gain on? It's not because of wars. Never is because of wars.
No.
By the way,
Uh-huh.
wars are often negative uh, trading situations for gold. Uh, Go back to 2025. I mean, to 2020. Go back 25 years to the
Hmm.
month of October, exactly 25 years ago.
Hmm.
Circle where the S&P was, and
Hmm.
circle where gold was. Look at a money supply chart, which has gone up like 4.5 fold since then, and look at an S&P chart from that price level it was then to now. It's matched the decay in the money unit,
Hmm.
S&P. It's gone
Hmm.
up 4.5 fold. Okay,
Hmm.
nice gains. Looks great on a chart, but
Yeah,
all it's done is replicate the decay in the money unit.
right.
Gold's gone up 16 fold
Yep.
in the
And
same.
actually, I saw a chart the other day, Michael. If you measured the S&P in gold since the turn of the century, it's actually declined a bit. That is, if
Yeah,
you if
yeah,
you if you didn't measure it in dollars,
yeah.
you measure it in
Uh,
gold.
No,
Well,
it's
it seems
it's
seems like there'd be a lot of fundamentals, Michael, for explaining what you're talking about. I mean, first of all, we're seeing the other day I saw that central banks now have as much value in gold as they do in dollars. So,
mhm.
or more, actually more. So
Yeah.
there's a loss of confidence in the dollars globally. And it's more foreign, it's more overseas, it's more our adversarial nations probably than it is
Mhm.
Americans.
Mhm.
So I'm thinking Americans, if they hear $8,000 gold, they're still, wow, I
They,
can't, I
even
can't get my
even 4,200, they think it's overdone.
right. And they think
Yeah.
it's time to take
Yeah.
profits because they're focused on their mindset is that it's the dollar that is money, not gold. Whereas it's, as JP Morgan understood, it's quite the opposite. So you
Yeah.
see the bond market now, your views on the bond market had been last we talked, and I read your letters every week. You thought there could be a rally that would make some sense if we saw some concern. We're hearing a lot of the big money, the insiders have been selling their stocks. So I wouldn't be surprised some of that is going into gold and into T-bills.
Yeah, sure.
T-bills, at least T-bills, if not the long dated
Mhm.
treasuries. I mean, T-bills make some sense if you want to have liquidity and you need some dollars. So, um, but so do you see the bond market then could be the trigger that just sets everything,
It
explodes it?
could be it could be
Yeah,
a trigger. Yeah.
yeah,
There's another one too.
yeah.
There's another one few people are thinking about. You want me to get into it?
Yes, please.
Bitcoin. Okay.
Ah, yes,
Bitcoin is
I definitely wanted to ask you about Bitcoin
yeah.
because I think it's telling a story, but I want to hear what you have to say.
Yeah. the original thought of Bitcoin was, it's an alternative currency. It's not controlled by government. They can't just print it, et cetera, et cetera.
Right.
Yeah, it's sort of sort of like a gold competitor. Okay.
Hmm.
You go back and take a monthly price chart of Bitcoin futures, go back to 2021, okay, and get a monthly chart of NASDAQ 100 and put them on the screen in front of you, line them up. They're overlays of each other, almost month by month,
Hmm.
certainly pivotal high to pivotal low, including the April sell-off this year. Bitcoin sold off from January to April. The stock market did. It bottomed the same week as the stock market and shot
Yes.
to a new high,
Yeah.
marginal new high, just like NASDAQ made marginal new highs. Uh, the problem with Bitcoin is that one, everybody's looking at other cryptos like Ethereum, but Ethereum's like, I think, 13% of the crypto market. Bitcoin's 57%.
Hmm.
Okay, so you got to watch Bitcoin. It has a momentum trend structure developed below it. You do not see it on the price chart, only on our momentum charts. That is an overlay of the 1987 S&P chart prior to the crash.
Mm. Mm.
So I could take the two charts and lay them on top of each other.
Mm.
So the momentum structural behavior of what Bitcoin's been doing since
Yes.
2023
Yes.
is build a floor on momentum. Now, price is making higher lows.
Hmm.
Momentum's built a floor that any idiot could see.
Hmm.
You don't want to go back to that floor again.
Mm.
And there's a couple long-term metrics we use to measure this, and they're different price levels. One of them is around 109. We're
Uh-huh.
trading down to 111 today. Okay, Bitcoin. You
Hmm.
don't want to go to 109, and you definitely never want to see 101 again during the latter part of this year, because you could have an ambush event in the crypto market.
Wow.
And that will impact the stock market, not just because it's correlated price-wise over the last several years, but
Hmm.
because we know many companies that aren't even involved in crypto are now suddenly involved in crypto up to
Yeah.
their hips.
Yeah.
And therefore, they can't afford to get gut kicked by an ambush in the crypto market.
My goodness.
Their controllers would get fired. Okay, so it's a situation to watch because if it happens, it's not going to be isolated to Bitcoin. It's going to impact the stock market.
Yeah, that's incredible. Well, it's interesting to note that stable coins, which had been buying treasuries, had been, as a means for people in
Mhm.
third world countries to own a currency that was stronger than their own. That is the United States dollar by way of the U.S. treasuries. Now, stablecoin, I just heard that they have picked up if I've got these numbers right, a tremendous amount of gold. So they do have gold
Mhm.
stablecoins as well.
Mhm.
When you think about it, what is stable? What is Bitcoin? It's denominated in fiat, isn't it? It doesn't have any
Yeah,
real money behind it. It's
yeah,
okay. I own,
yeah. What's it worth? Dollars. Okay,
it's
yeah, right.
worth dollars, and if
Mhm.
dollars becomes worthless, then what is stablecoin?
Yeah,
Now,
it's
to
got
me,
its
that
own. Yeah, I don't think the Bitcoin has to wait on further dollar drop. We talk about the dollar. There's one, the real value of the money unit, just in and of itself. But the
yes,
other one is the dollar index, which people like to look at, like, oh, the
yeah,
dollar's strong or weak. The
yeah,
dollar's weak all the time. It's always losing value because they
right.
increase supply 90% every quarter, every 10 years. Uh, the dollar is index, which is primarily the euro and the yen, by the way,
Mm-hmm. Mm-hmm. Yes.
70% of the dollar. So that's what you're talking about. You're talking the upside down version of the euro and the yen, which are also pieces of crappy paper backed by
Yeah.
nothing.
Mm-hmm.
So who cares what the value of one piece of paper is versus another, when they're all effectively not backed by anything but government printing, okay?
Mm-hmm.
It's a competition.
Yeah.
And they change, and right now, technically, the dollar index is in a very weak trend position. It looks like I wouldn't be shocked. We see the dollar index down to 70 or something in the next year, or
Wow.
two,
Wow.
which for it is a major collapse.
So.
Uh, but it's the real dollar value of the money units, fiat, euro, yen. I mean, the euro, yen, and the dollar that finally might get recognized as being a game we shouldn't have been playing.
Mm-hmm.
Maybe we should have had unbacked fiats.
Mm-hmm.
Maybe that didn't work out.
Yeah.
Maybe it just created boom bust cycles.
Right.
Maybe the Chinese are right. Gold is the way to
Mm-hmm.
go. It's real. You can't manipulate it. And I think once you get into a crisis situation, especially if it affects the stock market, which means emotion, family's well-being, it's the only thing people have to smile about right now is their retirement account. Take that
Mhm.
away from them, and
Yeah,
it's a dark city.
yeah.
The data points go south in a big way then. And the central bank does what? Goes ballistic on the, monetary excess.
Mhm.
Any tool they can figure out,
Mhm.
QEs or printing money, you name it. And now the Japanese, it's very interesting, and this is politically interesting about the instability that's occurring. Here in the US, we have a guy who ran for president who is supposedly on the free market end of the spectrum. And yet, when it comes to money, he thinks the government should monopoly control it, just like socialist corn crop.
Mhm.
Let's say the
Mhm.
government control the production of corn and the pricing of corn.
Mhm.
We call that socialism.
Right.
Well, for 100 years, we've had, the US government controls this fiat unit, prints it. It's no longer backed since Roosevelt and Nixon, and does what they want with it. So it's government control from above. And now we have a president who wants to artificially take the rates back down to 0 or 1
Mhm.
and print money if we need to. And they have a woman just got elected prime minister in Japan who is in effect a Trump type person. In fact, she's endorsed Trump and embraced him and so forth.
Yeah.
And they have a debt crisis there, as we know that the young population in Japan doesn't outpace the population of the older people, and therefore there's a crisis in funding all the
Sure.
obligations and so forth. And so she said, well, we're going to print, print, print. Okay, no, therefore, where on the political spectrum in Japan or even in the US do we actually have a solid defense of solid money?
Mm-mm. Nowhere.
Okay, so
I
no
mean,
wonder gold
Judy
is
Shelton.
rampaging. Yeah. It's not,
Judy. Yeah.
yeah, it's not like we're going to elect somebody who's going to finally do that. No, we've given up on it.
Right.
Oh, anyway.
Right. So yeah, it's and to top it off, of course, Mr. Trump is also looking to have the U.S. government buy big chunks of large corporations as well, too, which is not exactly a free market setup.
Right.
It's
So
more.
the world is turned upside down in a lot of ways. And all you got to do is turn the stock market upside down and emotion will just rise like crazy.
But the point that you've always made, Michael, you've always been very clear on this, is that in the end, nature wins. In the end, you can't fool Mother Nature.
Reality wins. Yeah.
Yeah, I mean, they're trying to fool Mother Nature in many different ways, or politicians are these days, but you can't, you print money out of nothing. And
Mhm.
I mean, this is the reason I got in. I had a professor, Dr. Peyton Yoder, in 1966, who was convinced, a historian, and he was convinced that when nations debase their currency, the work ethic declines and the general morality declines. I
Mhm.
wonder why. You're teaching people to be thieves, and the free market requires you to be honest, or you lose
Mhm.
your shirt.
Mhm.
But when you take that away, and when
Mhm.
taking it away, half of every transaction is a phony one because it's a phony currency. So
Mhm.
it's just, and then you can reallocate wealth, of course, to the people that have power, the people who are well connected. So the redistribution of wealth, Elizabeth Warren wants to tax the rich. No, what you do is let the markets ferret it out. I think we'd be in much better shape.
Mhm. Mhm.
But nobody thinks that way. Ron Paul, a few libertarians,
Mhm.
the Austrians do. That's the truth. But I guess getting there would be difficult, though, wouldn't it?
Well, sometimes it takes emotion to generate a rethinking process.
Yeah.
You have to go through a crisis to then say,
Right.
hey, what's wrong here?
Right.
That institution, the central bank, the Fed's been around 100 years, one very long human lifetime. Has it really done any good, or has it created boom bust cycles
Right.
by its
That's what it's
waves?
done. Yeah.
And then when you have that doubt and the pain creates the sense of, I got to find an alternative. And sometimes you don't know the alternative. You just throw your hands in the air and say, hell with it all.
Yeah.
In which case, that's real emotion. And you seek something that gives you safety.
Right.
And already we've been proven what does that.
Hmm.
Okay. And I think they're about to get an education on silver.
All right. So you mentioned silver, reasons for silver going up dramatically faster than gold. You said there are some reasons. I'm not sure I heard you say what those reasons, what you think
Yeah.
those reasons are.
You go back and technically analyze that move in 79 to 80, which was already gold, silver had been going up for years anyway. Okay,
Hmm.
step one. So it wasn't like they suddenly turned into bulls. They were already bull trends. They were going up and they were sort of increasing their angle of ascent. Silver lagged gold, but nice bull trend. Same in 2010. We'd already been in a bull market since the bear low in 2001 on gold and
Mhm.
silver. It had already been going up. And 2010, I think it was like September of 2010, suddenly something happened. And when you look at the price chart in summer of 2000, 1979 and September of 2010, the next six monthly bars went off the page.
Mm.
And yet, it wasn't because silver suddenly turned into a bull market. It had already been a bull market.
Mhm.
It had already been to some extent accelerating. Why did it go berserk?
Yeah.
We examined the silver gold spread, where we
Uh-huh.
divide an ounce of silver into an ounce of gold, express it as a percent, plot it as a spread chart, and it shows that over the last 50 years, if you find the highest reading each year, where silver was the highest value to gold during that year, in
Mhm.
20 of those 50 years, it's been 2% plus.
Hmm.
That's almost normal, 20 out of 50.
Uh-huh.
Many of those years weren't even bull trends for silver and gold. Okay. In the bull years, 79 and 80, it got up to 6% plus.
Hmm.
In the 2010 to 11 phase of that bull market, it got up to plus 3%. Right now, silver gold is at 1.24, 1.25%.
Mhm. Mhm.
Uh, when we plot that spread back in the 79 to 80 period, and we plot the same spread in 2010 to 11, forget the price chart,
Mhm.
silver versus gold, there's a ceiling that the spread had been living under.
Uh-huh.
When it broke out above that ceiling and it said, okay, silver's going to now outperform gold,
Mhm.
that's when price went berserk.
Ah.
We're in the same position now. We're decimals below a level where if you get the silver ratio to gold, not the ratio, but divide the ounce into an ounce, express it as a percent,
Mhm.
I'll give you
Mhm.
the number. You get above 1.31%.
Mhm.
Divide an ounce of these silver into these gold, 1 ounce into that.
Yeah.
Express it as a percent. When you get to above 1.31, you've blown out a 3-year ceiling.
Mhm.
The spread says, I'm on a rampage. That's when price also rampaged in those two prior bull markets.
Mhm.
It went up in quantum leap form.
Mhm.
Difference this time is we're starting at levels that are already above what had been the 50-year range.
Mhm.
$50, $50, we're now 51,
Mhm.
52, etc. So we're into free air. And if you do a ratio study of what happened in that 6 month period, 79 to 80,
Mhm.
2010 to 11, in that like 6 to 7 month zone of acceleration. If we match this 1979 move, we're going to go over $200.
Mhm.
Okay. If you match the 2010 to 11 surge at the end, we'll go over 100. Okay. The question is, and frankly, if you do a dollar conversion, a real value, the decay in the money unit version, a real dollar value, take
Mhm.
M2 and, et cetera, silver should be at least 200 anyway.
No.
But when a market, we found that there's many other instances in history, and we showed them in a recent report, lead, price of bread,
Mhm.
copper. Go back to the 1980s when silver again was under 50, and look at what happened in those metals at different times. When they came out of a zone they'd been living in for decades and went up, it was usually in a handful of months they'd triple or quadruple in price.
Mm.
And then they'd level off into a new zone of reality. So what we're arguing right now is we think we're on the cusp of moving into a new zone of reality.
Mhm.
And once you get there, you're not coming back here again.
Mhm.
Okay? You know, and I think a lot will be told in the first half of that move. Like if we get that spread breakout this month, then by the end of this year, if we find that silver December or January next year is trading at 100, then we're only halfway into that move. We might go to 200. I'm
Mhm.
looking for something meteoric, literally a quantum leap in silver, not a normal type of thing, and it certainly don't reference RSI.
Yeah.
It's going to be overdone RSI the whole way up.
Yeah.
Okay. Uh, anyway, that's the reality I think we're facing. And I think the key ingredient is not that they're in bull trends, it's that spread relationship.
What is the spread now, Michael, more or less?
That's like 1.24 area.
Okay.
But it's
So
been moving
relate.
up sharply for the last 5 months.
Uh-huh.
Silver's been gaining rapidly versus, in fact, net on the year, silver's up more than gold. Uh, but the
Well,
spread's been gaining, and we also run momentum of that spread.
mhm.
Spread chart's a price chart, price versus price. Okay, we run momentum of that, and it's at breakout levels already,
Mhm.
well before getting to that 1.31. So we're pretty confident that one, the spread's going to break out because momentum of the spread is already at breakout levels. And then once we do, that's when the tonal change occurs. The game changes.
Mhm. So 1.31 is kind of a key number.
That's the level you ever see that. Of course, silver may be 55, $60 by then, but the spread is saying at this point going forward, we're not going to behave normally. We're going to have a quantum leap. Silver's going to go into a new reality.
Mhm. Well, Michael, I know you do tell your subscribers what you're investing in, and it seems to me I can't see that you're doing much of anything other than silver. And I haven't heard you talk about the stocks too much, though. Bullish, obviously bullish. The gold miners are making the big producers are making money hand over fist. Free cash flow is just like I've never seen it before.
Yeah.
The margins they are now with $4,000 gold, even at $3,000 gold. I mean, it's just crazy. And the silver stocks are doing well as well. And I
That-
see that something you
yeah,
put out, I think maybe yesterday or well, the 14th of October, if I could just show this chart.
go ahead.
Uh,
It's broken out now, that spread. This
right,
shows silver miners versus gold miners going back to 2000 each month. And you can see there's a 4-point downtrend. We're now clear above that line now. So what
right,
it's saying is the silver miners are going to beat the gold miners.
right.
They're going to catch up and beat them. Now, that would echo what I'm arguing about silver versus gold.
Hmm.
So the other thing I'm doing, aside from fairly leveraged silver-related positions, is shifting out of primarily gold miners and gold into silver miners.
Hmm.
And I mean the pure silver miners. The interesting thing about silver miners is that most of silver that's produced does not come from silver miners. It comes from base metal miners,
Right. Copper
copper
a lot of
miners, and
times,
so forth.
lead
So
zinc.
what does that mean? Well, it means that if you take the price of silver up a lot, it doesn't really impact their desire to increase production of silver because their margin of producing silver may be 1 or 2 or 3% of their overall production.
Hmm.
So silver has sort of a unique situation there where unlike, let's say, wheat farmers, if you take the price of wheat up, they're going to plant a lot of wheat, okay? In the case of silver, only the silver miners are going to directly benefit
Hmm.
and more so than will the gold miners or the base metal miners who also produce the silver.
Hmm.
So it's a unique compression there. So you really want to be in the silver miners because they're going to outpace the gold miners now.
Hmm.
And they have been depressed just like silver for an awful long time in terms of what should be reality.
Right.
So
Yeah.
I'm moving a lot of my stuff over now, more focused on silver miners, specific miners.
So if I hear what you're saying, you think silver is just about the most depressed commodity you can think of because you were talking
Yeah,
about bread and all these other things.
historically speaking, yes.
Yeah, historically speaking.
Yeah, yeah.
Yeah.
And when these other guys have moved out of their ranges of reality that prevailed for decades, like copper from 1980 through about 2006, it went off the page to get to the new reality level.
Hmm.
It did it quickly. And then the new reality prevailed for another decade or two.
Right.
Silver hasn't done that yet. Why? Now, maybe it's because it's, artificially suppressed by some banks. Yeah, I don't know the argument,
Yeah.
but
Right.
all I can say is they better watch out.
Well, there's been a paper market, Michael, in both gold and silver, and I think that I saw recently that the borrowing rates, the short-term borrowing rates, the lease rates for silver
Yeah.
had reached 100%. There's a
Mhm.
shortage of silver for industrial purposes or whatever, and we know that the banks have been playing this paper market for a long time. And again, what's happening geopolitically, the BRICS are not, I mean, they're taking all the silver and gold off the markets essentially. So you can have all this paper claims against
Mhm.
against ounces of gold and silver. but if they're just not there, and the LBMA in New York or wherever
Yeah.
it is, it's not there, and people think they're buying gold and silver when they're just buying claims on gold and silver. That's maybe
Yeah. That's a reason.
1%.
That's one of the good reasons to buy miners.
Right,
Pure
exactly.
miners. Yeah.
And Michael, you were mentioning, I had referred to the profit margins that the miners are making now. One thing that's helping them, of course, is a relatively low oil price. So I just want to sort of wrap up here and ask you about your view of the commodities in general. But
Mhm.
for sure, gold has gone up much more rapidly, and silver is starting to now, than the cost of production.
Yeah. Yeah.
So what about oil, and what about some of these other input?
Well, the correlation between oil prices and gold miners is not good because there are times, and we showed this in a recent report,
Right.
we can overlay a
Hmm.
WTI chart and a gold miner chart. There are times when big bull moves in the miners and oil's going up too. I
Hmm.
mean, it's part of the commodity complex. So it's going up not because it's necessarily anything specific to oil, but
Hmm.
it's specific to cheapness of certain asset categories.
Hmm.
Oil tends to move with, sometimes better than, sometimes weaker than the
Hmm.
Bloomberg Commodity Index. Right now, it's a weaker component. Oil's under 60. We've got a major breakout level pending on oil, but it's up
Uh-huh.
at 68. I got to have a monthly close at 68 during this quarter, and I've got a massive buy signal for oil. And I'm not really worried about it hurting, but yeah, it will be a real reality in terms of profit margins. But
Right.
there's so many other things in play here that are
Hmm.
dwarf that in terms of impact.
Hmm.
Uh, Mainly just the cheapness of the miners, the cheapness of the metal. And when markets make errors like silver has, as we argue, when it makes up for the error, it often overdoes it. It goes berserk even beyond the new reality.
Hmm.
So if the new reality is silver for the next 10 years is 150 to 200, maybe it goes to 250 before it puts on its brakes. You get my point.
Hmm.
Uh, it's excess begets excess the other way, and surely silver is a slingshot situation, and so are the silver miners.
All right. Well, I think, but in general, you believe that commodities in general are still underpriced.
Commodities are definitely under, well, look at Bloomberg. It's a
Mhm.
good weighted index of commodity categories.
Yeah, the Bloomberg.
It's at 105 right now. You know where
Uh-huh.
it was in 2008? 237.
Wow.
We're
Okay.
less than half the price it was. And in 2011, when gold peaked, the Bloomberg was 170 plus. It's a 105 right now. So commodities are not expensive as an asset category. Same with stocks related to base metal miners, fertilizer stocks, stuff like that. They're also cheap. So
Hmm.
when money flees the stock market, as we think it will, because we think it's broken, despite the new teasing price highs, momentum says you're broken. When money finally leaves there, it seeks out what? Lower risk, better reward.
Sure.
Commodities are cheap. I think there's already some asset managers who know that.
Hmm.
And that's why, like the Bloomberg, has gone stone cold sideways for 2.5 years after dropping from that wartime high. It
Hmm.
dropped. It's since then leveled off about halfway back to what had been its bear low in 2020.
Yeah.
And it's not going down, it's not going up, but it's very close to an upside breakout level. And I think it could coattail gold, but it's not a better place to be. No,
No.
no,
No.
no.
Gold and silver. I mean, silver, for sure, and the silver miners are really. I have actually purchased some of the Sprott silver miners, an ETF that's just going gangbusters. I can't believe
Mhm.
it. It's just very exciting, Michael. It's just so great to have you again to express your views, and folks, you've been hearing Michael talk about, if it gets to such and such a level, then boom, we're going for it. If you subscribe to his letter, you can keep up to date, and he sends things out whenever it's necessary. His weekly letter is sort of the main thing, but he's got other things. When something triggers the market that you need to know about, he sends it out to you. It's a great service. You know, you might want to think about subscribing, because it's the amount of money you pay for a subscription will pale compared to what you get out of it, I believe. Certainly true in my case, Michael. And I want to thank you so much for that. All right, folks. Well, that is it for now. Actually might be talking to Chen Lin about some critical metals a company that's producing or building up to produce critical metals. You just visited them. Might be talking to Chen yet this week. I'm not sure. Next week, though, I do expect to have Kirsten Brewer of Hydrograph Clean Power, as well as another member of that management team. So until we meet again, goodbye and God's blessings to you.